Hey everyone, it's Alan Brochstein from 420 Investor and New Cannabis Ventures here with your weekly update where I talk about some of the most important stories of the last week, which will be in our newsletter that will go out tomorrow morning at New Cannabis Ventures. So this is a pretty rough week, second week in a row of large declines, down I think 6.6% this week, and it left the index down 19%. It seemed to me that this was driven mainly by what's going on in the overall market. In fact, there was very little news in the cannabis sector whatsoever. So pretty sure that that's what it's about. Fortunately, the lows that were put in mid-March have held, but this was, like I said, a very challenging week, and I'm not sure people can take much more of this. We'll see. So with that, like I said, this wasn't a very busy week. In our newsletter, we include the highlights, and those highlights are from both the curated press releases and our own proprietary content. We were kind of heavy on the proprietary content this week and light on the important press releases from companies. Those press releases tend to be around capital raises, M&A, and financial reports. So just taking them alphabetically, there was a capital raise. Not a capital raise. Sorry, there was a capital raise, but not exactly what I was going to say. C3 Industries did a sale leaseback with New Lake. New Lake is publicly traded REIT. It's similar to IIPR, and they funded this $34 million project in Missouri for C3. C3's kind of a under-the-radar private operator. Their roots are in Oregon and Michigan, but they're expanding into other states. You can learn more about C3, by the way. We did an interview with their CEO, I think earlier this year, maybe it was late last year. So that was the first piece of news. The second one was M&A related, and that is Harborside closed the second of its recent acquisitions, buying Loudpack, and so that's now putting together not only Harborside and Sublime, but Urban and now Loudpack to create State House. And they announced that they're doing a reverse split and changing the name later this month. Another one on the M&A front was Jushi completing their $45 million acquisition in Nevada. It was a vertically integrated organization, New Leaf. And then finally, there was one financial report. It was Tilray's Q3, and it was a little bit of a miss overall. And of course, on their cannabis revenue, it did decline, kind of as I had expected sequentially. But it wasn't as bad as it could have been, I would argue. I'll talk more about that in just a moment. On our proprietary content this week, we did 3 interviews, and I also had 2 market data reviews, as well as an update on the revenue tracker. And so that was the first one, the revenue tracker, and we kind of took a higher level perspective and just talked about how the 2022 outlooks are coming down. We're pretty much through earnings season. Verano's the only major company that hasn't yet reported its Q4. Some of the smaller ones haven't as well. So that was one piece. The second exclusive was a review of the BDSA data for February. Remember, January saw cannabis sales plunge sequentially, and growth rates fall from a year ago, or decline in states that are less mature. And so the February numbers have to be adjusted for the shorter month. It's just 28 days, obviously. And in many of the states, so that's about a 10% decline that you'd expect if things were steady. No states declined by that much, and some states even increased sequentially. The year-over-year growth rates expanded a little bit on average. So that was nice to see that bounce back. The next one was a follow-up interview with Cann. Cann is a multi-state beverage operator. Or I don't know if operator is the right word. They license their name out, so they find manufacturing partners in each state. And the company raised $27 million earlier this year and talked about how it's deploying it. We also interviewed the CEO of both Cresco Labs and Columbia Care, And to kind of get the backstory on the merger, they had been talking about this for months, and so, but also to get any insight we could on the dispositions that lie ahead. So I thought it was an interesting perspective to hear the two of them. It was mainly Charlie doing the talking. The next one was another market review, this time more real time. Illinois had already reported their adult use sales, but this week they reported their medical. The medical sales are declining pretty sharply year over year. That tends to be the case once adult use comes into a market. So on a combined basis, this was actually pretty slow growth year over year, just 12.5%, but it was a big improvement from February. And then finally, our third interview was with the CEO of, so Northern Lights SPAC has announced its intent to merge with Safe Harbor Banking, and we interviewed the Safe Harbor CEO and why they're going public and why a SPAC. And so that was interesting. Probably the most interesting part of that is the M&A that she expects to see ahead. And she also shared an interesting perspective about what legalization might mean. A lot of people think that banking is going to be easy once things are legal, but due to the highly regulated nature of the industry and the requirement that you know your customer and banks, I think it's called BSA, Bank Secrecy Act, things like that, it's pretty complex. So that was pretty much it for the news. Like I said, it was a light news week. Each week we include in the newsletter kind of some unique perspective, and I know I pick on Tilray a lot. I think they deserve it, but so this report kind of rubbed me wrong. They really talked about how great things are going if you read their press release. And of course the stock reacted positively initially. I was kind of scratching my head like what's going on? And on the one hand, it wasn't as bad as probably some feared, and that could have explained it. But I think it was a little more nefarious than that. The company really exaggerated things, especially on the net income. So what we did this week in our piece was take a look exactly how did Tilray get this $51 million net income. I'll give you a hint. It's bogus. So you'll have to read it to understand fully, but there's more to the story. I think that the reason why the company is pounding its chest so loudly, even though it doesn't deserve to, in other words, talking about its net income when it's a joke, the fact that they have a net income, and talking about all the growth. Well, what has really grown at Tilray more than anything else? The number of shares. And so we wrapped it up with just that final nugget. The company put into place a ATM after the quarter ended. So it was kind of funny. They waited until after the quarter, but they didn't wait much longer to start selling. They were very aggressive. This wasn't in their boastful press release about how they had hit the ATM so hard. You had to wait till the 10Q was filed. I remember looking at it after the close that day, and the first thing I saw was the number of shares. I'm like, whoa. So they ended up issuing, I think, about 16 or 17 million shares, 16.9 at an average price of about $5.31. And there was also another negative impact from doing that. They had to lower some warrant exercise prices. So I think that how loudly Tilray is talking about their so-called success and how quickly they're tapping their ATM is really telling. And I think the company, we've been writing about, the company's in a tough spot. They've got a lot of debt coming due. They need to make things happen. Their CEO, Erwin Simon, has put out some very unrealistic expectations. Of course, there's a lot of asterisks being attached to them now, but this whole idea that the company is going to do $4 billion in 2025 or something like that, go figure. So anyway, that's really it, and I'll be back next week. Have a great one. Take care.